Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now, major equity markets had another down day, but the most notable market moves were in commodity and bond markets. The 10-year bond yield in the US fell to 1.72%, and that's down from almost 2% just 2 days ago. German bond yields similarly fell below zero to a negative 0.07%, down from a positive 0.22% also a couple of days ago. Recall that since bond prices and yields are inversely related, these falling bond yields reflect a sharp rise in bond prices. To the similar picture in commodity markets, the most notable moves were in oil, where WTI oil pushed strongly higher to touch $107 per barrel at one point before closing around $103. And this was despite an announcement from the IEA members that they were going to release crude oil supplies from strategic reserves. Other metals where Russia is a significant exporter, most notably palladium and platinum, also rose closer to 2021 highs. Gold, of course, rising above 1,940 per ounce amid what's turning out to be a broader shift to safe havens. Now, two observations stand out to us that we think are key for investors. First is that the commodity channel remains key in our view, as this is one main channel through which geopolitical risk could feed into financial markets. We've thus far been of the view that both sides have an incentive to keep key commodity exports from Russia, including energy, flowing as usual. However, some reports of rumblings in both US and European capitals about potentially curtailing this to some degree is one thing we'd keep a close eye on. And second is that in currency markets, the euro continues to face some downward pressure, given it arguably faces greater economic impact should the conflict widen. We continue to see the Japanese yen as an attractive short-term hedge candidate, but believe being long the Japanese yen versus the euro, or even the pound sterling, remains a better approach to build that hedge as it removes the risk of headwinds from any US dollar strength. We also continue to like gold, of course, as another hedge candidate. Take a look at our daily FX navigator if you want to see key levels on all these pairs. Now, while the news cycle remains focused on the Ukraine conflict, we would also keep a tight eye on key economic data and events. Both China and the US saw manufacturing PMI data rise, turning out higher than consensus expectations and painting a relatively positive picture for growth. PMI data was a bit more mixed across Asia. The sentiment indicator held up well in Vietnam, Malaysia and the Philippines, but we saw some flowing in similar releases in Japan and Indonesia. Now, coming against the backdrop of growth risks from Ukraine, this feeds into a broader challenge facing central bankers in coming weeks. The main event to watch here, of course, is US Fed Chair Powell's testimony to House and Senate committees of today and tomorrow US time. What markets will be watching most keenly is any signals on how the Fed is likely to balance the case for hiking rates due to inflation versus the case for hiking at a slower pace than before, given emerging growth risks. Just as an indicator, markets are now looking for only 5 rate hikes this year, and that's down from a peak of 7 a couple of months ago, but definitely closer to our own expectations of 4 Fed rate hikes in 2022. This easing of rate hike expectations, bond yields, of course, could end up offering some welcome support to risky assets. So, focus on short-term hedges in FX markets and gold, and of course, keeping a tight eye on the Fed. But we'll take a pause there. As usual, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.